Here is a question that should keep you awake at night. What happens when the United States government throws a sale and nobody shows up? For 80 years, U.S. Treasury bonds were the pristine collateral of the world. They were the gold standard of safety if you were a country, a bank, or a pension fund. You bought us debt because it was risk-free. But something terrifying just happened in January 2026, that the mainstream financial news is desperately trying to bury the US Treasury, held an auction for 30-year bonds usually. Foreign nations like China, Japan, and Saudi Arabia line up to buy billions, but this time, for the first time since 1996, foreign buyers effectively went on strike. They looked at the US debt, they looked at the inflation, and they said, "No thanks, we don't want your paper promises anymore." This is the signal we have been waiting for. It is the global vote of no confidence. While the politicians argue about tax rates, the creditors of the United States are quietly walking away from the table. And where are they going? They aren't going to cash. They aren't going to the euro. They are pivoting into the only asset that has no liability attached to it. They are dumping the dollar to buy gold and silver. If you are holding US government bonds in your 401k, or if you are holding cash in a bank account, you are holding the very asset that the rest of the world is desperately trying to sell. Debt wall is here, and the only way over it is real metal. Welcome back to channel. Hit that subscribe button and turn on the bell. We are building a community of critical thinkers who refuse to be the bag holders for a bankrupt system today. We are exposing the US debt rejection. This isn't a theory, this is happening in the auction markets. Right now we are going to break down the charts that shows central banks dumping treasuries at the fastest pace in history, and why this specific event, the 2026 rollover, is the catalyst that pushes gold past $5,000 and silver past $100. Treasuries or metals, which one do you trust to survive the next 5 years? I want to see a vote in the comments. Paper or metal? Let me know now. Let's look at the $9 trillion problem that no one can fix. Let's start with the math. It's ugly, but you need to see it. The US national debt is currently over $38 trillion. That number is so big it's meaningless to most people. But here is the number that matters. $9 trillion in 2026 alone. The US government has to roll over $9 trillion of existing debt. That means $9 trillion of old bonds are expiring. And the Treasury has to issue $9 trillion of new bonds just to pay off the old ones. That doesn't even count the new spending. That's just to keep the lights on. In the past, this was easy. The Fed would call up China or Japan and say, "Hey, buy our debt," and they would. But look at the charts. China has cut its holdings of US Treasuries for 9 straight months. They are down to levels we haven't seen since 2008. They are liquidating. Japan is selling to save the yen. Saudi Arabia ended the petrol deal and is no longer obligated to recycle oil profits into US debt. Who buys the $9 trillion? This is the liquidity crisis. There is too much supply of debt and zero demand for it. When supply exceeds demand, prices crash, and in the bond market, when prices crash, interest rates spike. This is why your mortgage is high. This is why your credit card APR is 25%. The market is demanding a higher risk premium because it knows the US government is insolvent now. You might ask, if China is selling billions of dollars in bonds, where are they putting that money? They aren't putting it under a mattress, they are buying rocks. The World Gold Council just reported that central bank gold buying is the fastest it has been since 1967. Think about that date, 1967. What happened shortly after 1967? The London gold pool collapsed, and in 1971, Nixon closed the gold window. We are seeing the exact same setup. The central banks know the game is up. They know the US will have to default either by not paying, which they won't do, or by printing the money to pay inflation. They are choosing to front-run the inflation. At the price action, gold is sitting above $4,700. Silver has broken $8. For these prices aren't high. They are just reflecting the fact that the dollar is losing value when a central bank swaps a treasury bond for a gold bar. They are trading credit risk for bearer asset. A treasury bond is a promise that the US government will tax you to pay them back. A gold bar is payment in full. Day elites, including firms like BlackRock, are hedging. They see the debasement trade. They know that the only way the US government survives 2026 is to devalue the currencies. They are dumping the paper liabilities and hoarding the physical assets. Let's go back to that zero foreign buys headline in January 2026. The auction for the 30-year bond was a disaster. The bid-to-cover ratio collapsed. Foreign buyers backbone of the US debt market were. Absent this forced the primary dealers, the big Wall Street banks, to swallow the debt. They had to buy it because they are required to by law, but they don't want it either, so now the banks are choked with bad debt. Their balance sheets are toxic. This is exactly what happened in September 2019 during the repo crisis. It's exactly what happened in March 2023 with Silicon Valley banks are full of treasuries that are losing value every day. As rates rise, if they try to sell them, they crash the market. If they hold them, they go insolvent. This is the doom loop. And this is why the dollar crash fears are trending on social media. It's not just conspiracy theorists on X Twitter. It's Forbes, it's Yahoo Finance. They are finally connecting the dots between the debt wall and the Bitcoin gold surge. The market realizes that there is no exit strategy for the US government. They can't raise taxes enough to pay $38 trillion. They can't cut spending. Entitlements are untouchable. So they must print. This is where you come in. The central banks are buying gold. They are moving billions, but for the average person, gold at $4,700 is a heavy lift. It's expensive. This is why silver is the people's metal. This is why silver is reacting so violently, over 150% in the last year. Silver is the high beta version of gold. When the world loses trust in bonds, money flows to gold first, but when gold gets too expensive, the money floods into silver. We are seeing a monetary squeeze in silver. Investors are realizing that silver is not just an industrial metal for solar panels. It is a monetary metal. It is the only asset that is historically cheap relative to the money supply. If the central banks are rejecting the dollar, if the bond market is rejecting the debt, you need to reject the counterparty risk. Owning physical silver is your personal vote of no confidence in the system. It is the only way to opt out of the Great Recession. They launched the CBDC, central bank digital currency, to fix the debt crisis. Your silver will be outside their system. It will be private. It will be yours. There is one more accelerant to this fire: geopolitics. President Trump's tariff threats are accelerating data. Countries are afraid that if they hold dollars, they can be sanctioned or tariffed. So, to protect themselves, they are selling treasuries to build independent reserves. This creates a vicious cycle: more tariff, more fear, more selling of treasuries, greater than higher interest rates, more printing, higher inflation, higher gold, silver prices. Fed probe into the dollar's stability is just smoke and mirrors. They know what the problem is. The problem is the debt. And the market has decided that the debt is bad. You are witnessing a paradigm shift. For 40 years, bonds were safe, stocks were risky. Now, bonds are returned free risk, and risky assets like silver are becoming the safety net. Here is the warning: the financial system relies on the greater fool theory. They need a greater fool to buy the bonds they are selling. China isn't the fool anymore. Japan isn't the fool anymore. The central banks aren't the fools anymore. Who is the fool? The fool is the pension fund. The fool is the passive investor in a target date fund. The fool is the person keeping their life savings in a currency that is being debased to pay for past mistakes. Don't be the fool. The wealth transfer is happening. It is moving from paper to physical, from creditors to debtors, from the trusting to the prepared. You have the data, you see the charts. The auction failed. The debt wall is here. The window to exchange your paper currency for real metal is closing. If you found value in this breakdown, smash that like button. It helps us wake people up before the auction market freezes completely. Share this video with anyone who thinks bonds are safe. Show them the numbers and subscribe to Wealth Unwired. We are watching the 30-year yield like a hawk. If it breaks 55%, we will be going live. Leave a comment below. When the debt implodes, what is your number one asset? Silver, gold, or Bitcoin? Stay sharp, stay stacked, and I'll see you in the next one.